is Aaron Crown of MortgageImplode.com, and you're listening to Run to Gold.
Arm's length reporting for investors who want the whole story. This is the Corlin Economics Report.
Okay, welcome back. You're listening to the second hour of the Corlin Economics Report. I am Al Corlin. I appreciate you joining me. Starting out with a couple of folks, one of whom has been on the show numerous times, Trace Meyer, a very, very interesting guy. I guess I should say Trace Meyer JD, because that's on all the other websites. That's how you're introduced. You know a lot about the resource industry. You know an awful lot about conservative politics, etc. But joining us also is David Tice. David is the purveyor, for lack of better terms, of the Prudent Bear Fund. Very, very, among people of our philosophical bent, it is a very, very popular place to invest money. Tell us a little bit about it.
Well, I was the founder, Al. I actually sold the fund to Federated Investors, so it's now the Federated Prudent Bear Fund. Did that back in December of 2008. I'm now the strategist for bear markets at Prudent Bear. And Prudent Bear is a negatively correlated fund. We make money when the market declines. We also invest in gold and silver mining companies along with being short stock. And we're negatively correlated. We make money when the market declines.
Trace, how'd you guys get to know each other? I mean, I know that you guys are good buddies, and I know that philosophically you probably are coming from the same spot, but how'd you guys get to know each other?
Well, David's a very sharp investor, and we happen to be invested together in some ventures, so I get to ride on his coattails, you could say.
What do you guys think right now? You know, you talk about making money in a bear market, okay, which I think your philosophy is great. What do you think about what's going to happen in the midterm, let's say the next 12 to 18 months in the, let's say in the resource segment of the stock market?
Well, Al, I think the next even 6 months are going to be profoundly bearish. I think we had a significant rally off the March low. It's kind of a reflex rally, should not have been unexpected. We had our first decline about 5 months ago. We rallied back. We've declined again. Now we're experiencing an oversold rally bounce. But I think we're right at the cusp of breaking through 1,000 on the S&P, and we're going to go lower for a while. Now, the resource sector is we're fighting this tug-of-war between inflation and deflation, and gold is going to go down in the first part, in my opinion, of the deflationary scare, and therefore resource stocks could go down for a while.
Trace, what do you think?
I agree with David here. Gold, when you look at what's happened with the Dow, it's actually below 8 ounces to buy the Dow. And so even though the Dow is up nominally, it's down significantly in terms of real value. And at runtogold.com, my site, that's primarily what we focus on, is looking at performing mental calculations of value and using gold as that numeraire, or that denomination to use for your balance sheets and income statements. And so when you look at the real ability of Americans to earn priced in gold, that's going down too. For example, when David came out of school, he probably would have earned about $400,000 a year as a recent college graduate in terms of today's dollars.
I wish it wasn't quite that.
Well, my father, when he came out of school, he was offered 25.7 ounces a month of gold in terms of value. It was $900 at the railroad or $700 at one of the big accounting firms. Today, an average American coming out of school, 19.6% unemployment, and the ones that do get a job are lucky if they're going to earn 5 ounces of gold a month. And so that's going to have to keep going down because Americans, unfortunately, they've borrowed too much, they've spent their future earnings, and now they're going to have to be able to live with some austerity programs of their own personally. And that, of course, is going to be put a lot of drag on corporate earnings because people just aren't going to be able to buy things.
So you're agreeing with John Williams of Shadow Stats when he says 9.5% unemployment is just an absolute pipe dream.
Yeah, well, I mean, 9.5%. I mean, recent graduates with a master's degree are now at 4.2% unemployment, up from 3.4%. I mean, we're talking about the 09 graduates having to now compete with the 2010 graduates. So, unfortunately, there's this huge misallocation of capital with higher education, and that's because the entire U.S. economy is going to need to be retooled.
You know, David, I've tracked your fund for years and years, and I've seen you on interviews, especially a number of years ago, where you were actually ridiculed, mocked, heckled. Recently, not the same reception. More and more people are saying, hey, this guy maybe was a little ahead of himself or ahead of where we're at, but there's a lot more openness to that. Talk with our listeners about what they can do today to help protect themselves, their loved ones, in this environment that we're in worldwide.
Well, first of all, I think they should invest in education and really learn. Listen to this radio show. You guys do a great job in bringing in guests who see the world correctly. Trace and I are both believers of the Austrian School of Economics. Go to the von Mises website, Mises.org. And then on the other side, once you convince yourself that this Keynesian theory is simply flawed and that we're going to have a price to pay for all the money printing that Trace just talked about, then you're going to be inclined to be negatively correlated. And you aren't going to buy into the theory that you ought to be 70% of the stocks all the time. And then you will realize that gold represents the real money that's out there because the rest is fiat. And once you do that, the investment picture becomes a lot more clear. And I think you'll invest in funds like Federated Prudent Bear that's negatively correlated, that makes money when the market goes down. I don't necessarily like being a bear. I mean, my mom has chided me in the past about why can't you be more optimistic? And Americans love to be optimistic, etc. But with your money, you need to be prudent and you need to be not optimistic, pessimistic. You better be realistic about your money.
Well, and you've been right, David. I mean, our partner, Clyde Harrison, said that we're going to be in a moose market. And if you look at since 98, it's been flat. I mean, the S&P basically has gone nowhere. So on that side of the equation, you've definitely called it right. On the precious metal side of the equation, what were we looking at? $285 gold, $4 an ounce silver. So you've definitely been right on that side of the equation. I don't equate pessimism with not making money. I equate optimism with making money and understanding what's happening and then being able to protect ourselves and our loved ones. You know, I've told Al, my favorite video is Tech Ticker, Yahoo Tech Ticker. I know you've been on there. And now it's amazing, about half of all the guests who are on there are basically now talking about what you've been talking about for years and years and years.
Interesting. Going back to the optimism comment, I say I want to be optimistic and I want to have money left so that I can do good things for the world. And frankly, everybody needs to get you know, a lot of people are going to get this wrong, but if few people can get it right and invest correctly and have some money when the market does bottom, I don't think the market will bottom until we're at 400 on the S&P. And I think Trace and I both feel like he likes to measure things in terms of ounces of gold, which is very, very smart in terms of the Dow to gold ratio getting back to 1 or so. When the market gets to that level, you want to have some money left so that you can invest then. That's when you really make a fortune. And then you can do great things. You can help out your friends and family that are destitute, do great things with your charitable contributions. I mean, you can really do some great things. You should be optimistic about that.
You know, and I think that's something that's really worth talking about. And what I'd like to do, we're going to get Trace and David back here in the next segment because I want to elaborate a little bit on how, you know, we don't talk gloom and doom necessarily on the show. We talk about defensive investing, and we talk about how you can protect your families and your loved ones, and taking it one step farther, as David just did, how you can actually help out society in general. Because I got to tell you, I'm convinced that right around the corner, if you're not invested in the proper segments of the financial market, you know what? It's almost embarrassing to say how much money you're going to lose. I'm going to be right back with Trace Meyer and Steve Carr and David Tice.
This is John Rubino from DollarCollapse.com, and you're listening to Run to Gold.